also have Ashi Anand, who's joining us on the show, founder and CEO at IME Capital. Ashi, hi, good afternoon, and thanks for your time. Your take on the entire fertilizer segment and overall chemicals, if you have a view over there?
Hi, thank you for having me on the show. So fertilizers is a space we are very active in. We tend to kind of stay away from businesses with large amount of government interference or government controls, more capital intensive businesses. Fertilizers broadly is a space that we've not really focused too much on. It doesn't really fit very well within our investment thesis and rationale. That said, specialty chemicals is a space that we do like. And while it is a space that hasn't really been performing too well over the last couple of years, what you have seen is that Chinese supply has come back in a big way post-COVID. But once we kind of go through this current kind of demand supply slump, there are different kind of pockets in the specialty chemical space that India is very kind of strong in. And these kind of, there's a very interesting foundation for longer term growth as as these Indian companies merge into global supply chains. Given the very large amount of chemicals that are still produced in China, this value migration away from China towards India, it could be because of either cost reduction, supply chain rationalizations, or just general de-risking, or various other measures by global counterparts, provides a long runway for growth. But you kind of need to go out of this current kind of slump that we currently been in over the last couple of years, where there's been a certain amount of Chinese dumping and demand really hasn't yet picked up.
But as we do that, listening to this at the FII 9 Riyadh 2025, Hina Gambhir caught up with the unit raises. Revenue from operations at 11,905 crores compared to 9,228 crores on a year-on-year basis. Yes, so those are standalone numbers that we're talking about. And for the net profit, if you take a look at that number, that has come in at about 906 crores compared to 662 crores. So jump at least in those metrics. We'll try and get in a better understanding on how they have fared versus what the street expectation was, because while this might seem like a year-on-year spike, the stock is not reflecting any optimism right now. About 1.5% cut and a sharp fall on the stock once the numbers were out. So we'll get you more details on these numbers and how they fare versus street estimates as well. But Kunal, your initial take on TVS Motors chart, the 1.5% drop that we're seeing right now?
I think it's an excellent chart, frankly, Snehi, even after this intraday dip or the downside for the stock price. But I strongly believe that it's been a fantastic mover for TVS Motors, moving up, strength to strength. I think recently also just 2-3 days back or so, the stock was perched at a fresh high at 3,700 mark. So I think in that context, the longer term price trend is extremely positive. Also, I think we are at a point where the auto stocks are into a very strong uptrend, and very few leaders have emerged in this pack which have branched to break past about their previous lifetime high levels or multi-year highs. For the in that case, TVS Motors is one of the stocks which falls in that category. So I strongly believe that it's a very strong performing stock. I would look at dips as a good buying strategy for TVS Motors. I think the near-term support for the stock is around 3,500 to 3,550 zone. If it taps back into this kind of a territory, it becomes a good contra buy.
Interesting. So TVS Motors in focus. Mind you, revenue at 1,190 crore versus 922 crore. No, I believe I'm looking at wrong numbers. It's 11,905 crore in terms of the top line versus a top line of 9,228 crore on a YOY basis. So you've seen the top line go up quite sharply. Profitability also doing fairly well for itself. So you've got profit after tax number of 906 crore versus 663 crore same time last year. What we'll do is we'll quickly zoom in and understand what the expectations are before we tell you that, because before we give you an assessment, and we'll also look at margins before we give you that assessment. But we still have Ashi, I believe. Ashi, do you have a view with regard to TVS Motors in particular?
Yeah, sure. So actually, it's clearly too early to comment on the results. The numbers are just out. But I think in terms of our longer-term view, two-wheelers is actually a space we're not as comfortable with from a longer-term perspective. And just to kind of explain why. If you're looking at the underlying dynamics of what's happening in the space, while there is clear momentum in the near term, and there is a kind of recovery which is expected near term, it should help kind of shorter term price performance. From a longer term perspective, you have you're seeing a very cozy kind of 4-player market turn into a minimum of 6 players with the addition of an Ola and an Ather. Profitability on kind of EVs, which is where the entire industry is moving, is at least as right now substantially lower than that of your ICE two-wheelers. Where this is going to emerge as we go ahead in the future is also not very clear. Now, in order to kind of value these companies, and whenever you're buying a company, you're actually buying it for its longer-term compounding of cash flows and earnings. We need to have kind of clarity 5, 7, 8 years down the line. What our relative market share is going to be? What is the actually underlying profitability on the EV business? And are you likely to see big shifts away from what current market shares are? We believe it's too early to really be able to take an accurate sense on this call. And therefore, when it comes to the kind of auto space, we are a little more comfortable in, say, passenger vehicles, where the number of players is relatively kind of intact. It's not that you're seeing a large amount of increment players coming in. The transition to EVs is also likely to be a bit slower. We also kind of believe that there may be attractive players in auto ANCs, especially auto ANCs that are not very dependent on ICE engines. But for two-wheelers specifically, because we expect this space to really kind of be the forefront in terms of the shift towards EV, until we don't have clarity on who the eventual winner is likely to be, and we believe it's still too early in the shift to actually be able to call that, it's a space we largely staying away from.
Largely staying away from. You've looked at the numbers more closely, Snehi. You want to take us through what the expectations were versus the numbers?
So the revenue number for Q2, the street consensus estimates on the standalone basis was around 11,729 crores. It's coming at 11,905, so slightly better than what the street was estimating. Similarly, for the net profit, the estimate was about 951 crores. It's coming at 906, slight bit of a miss coming in on the PAT. The EBITDA number, what we can see over here in terms of what the estimate was, 1,500 crore rupees. Let's just pull up what the EBITDA number was, and EBITDA has come in at 1,508 crores. So yes, in line, but the real pressure here is on the margin, because we were expecting this number to be around 12.8% and it's come only around 11.3%. So in fact, 1.5% lower than what we were estimating on the margins front, and it's actually margins that are under pressure. So as we have more that the company releases on the exchanges in terms of either a presentation or a press release that highlights what has kept margins under pressure this time around, we'll have more idea. But let's just pull up the stock once again and see what TVS Motor is doing, if there is any change in the stock performance after the numbers have come out. Let's pull up the intraday chart, please, for TVS Motor. Yes, continues to be under pressure and further pressure. Now a 2% cut is what we are seeing on TVS Motor. So Harsh, this is the way the numbers have panned out, and it's actually margin pressure that is keeping the stock under some pressure. A 2.5% cut now on the stock.
Yeah, 2.5% lower, and it's a marginal miss as such. It doesn't look like a solid miss. TVS Motors, Kunal, do you have a view?
Yeah, we just discussed, this Harsh still looks very bullish.
Fair. Okay. Ashi, you're not positive across the basket on two-wheelers. Give us a sense on that. You were suggesting that, or you're tilting towards that. You're not positive at all across the board?
No, sure. So let me just explain, right? In our PMS portfolios that we run,
Sure.
our idea is buying longer term business growth. And we kind of try to focus more in terms of where businesses can reach 3, 5, 7 years down the line. And that is really the growth that we're seeking to participate in. Now, within that context, right, if I'm looking at a two-wheeler company, I do know there's going to be substantial value being created by certain two-wheeler companies, but given the fact that you're no longer betting on the relative strengths in the ICE space, you are really talking about kind of 5 years from now, the vast majority of two-wheelers being sold in India are likely to be electric vehicles. Now, while ICE market shares are well known and quite stable for extended periods of time, it becomes very difficult to take a call in terms of who is likely to be the winner. What are the market share dynamics will be 5 years down the line? It gets especially complicated when you have pure EV players like an Ola Electric and an Ather currently. Now, if you just look at someone like an Ola Electric was being very successful a year and a half ago, suddenly a lot of problems on some of their batteries and on the overall EV. And you've seen market share shift dramatically. Now, in that context, right, we know who's kind of doing well today, but 3 years, 5 years down the line, who's going to be the winner in the EV space? That company will generate substantial value creation for investors. But the level of predictability of that winner today is not very clear. And which is where, when we take longer term bets, when ours is a bit more of a buy and hold kind of an approach, we don't trade that actively. We want a greater level of conviction and clarity around the companies we're investing in, actually being able to grow consistently over the next 3 to 5 years. And given kind of the fact that market share dynamics are still unclear, and also very importantly, the profitability on EVs. Most EVs are currently not really making too much in terms of margins. A lot of them have been loss making. ICE is a tremendously profitable business, right? Are you going to be able to make the same level of margins that you make in kind of ICE on EV scooters and EV motorcycles? That again is not very clear. When it comes to longer term investing, we prefer investing in areas where there is a greater certainty. And I think that is the core view. That said, I think there is clear near-term momentum, and over the shorter term, these stocks are likely to perform. Our kind of negative stance is more just from this longer-term perspective.
Point taken, Ashi. What we'll do is we'll slip into a short break. On the other side, we'll continue our coverage. Stocks.
8th pay commission has been announced and a chairman is going to be selected soon as well. So that is very positive, and I'll tell you why the 8th pay commission is such a big deal for the markets, even though it largely has to do with revision in pay scales, allowances and pensions for government employees. Now the quantum of employees that this affects, it affects over 50 lakh central government employees and 65 lakh plus pensioners who are dependent on the scheme for any revision, upward revision, hopefully, in terms of the money that they are getting allotted. Now, remember, the 7th pay commission was all the way back in 2016. So this is almost a 10-year jump, after which we are seeing this 8th pay commission come out. And market experts also believe that if there is any positive news in terms of the allocation that the commission does towards government employees in their salaries, pensions as well. So this is a big announcement coming in. Kunal, while we're talking about consumption, or in fact, let me get this view from Ashi. Ashi, your overall take on consumption now. This 8th pay commission announcement was anticipated for a long time. The committee has been formed. That approval is in now. Your take on how this could affect markets in terms of consumption, demand, anything on that front?
It's actually quite interesting because consumption has been a space which has been underperforming for the past 2 or 3 years. But what you have seen from the start of this year is time and again kind of incremental kind of positives coming out. It started with the kind of tax cuts at the budget. You've recently had the big reductions in GST, the entire GST rationalization. You've also had a fall in interest rates, which does put a lot of money back in the hands of kind of households as EMIs, etc., come down. And then you had underlying rural recovery. And you now also have this kind of 8th pay commission, and given the sheer quantum of the number of people employed by kind of government, that does kind of tend to have quite an impact on the margin. I don't think one factor on its own is kind of enough, but you have a very attractive coming together of multiple kind of factors. These should kind of play together and lead to a kind of consumption recovery. A lot of consumer companies are speaking of a recovery in the second half, and especially as we go into FY27. Now, this is a space which is a very attractive longer-term kind of structural play because of, as economies move beyond the $2,000, $3,000 per capita income mark, you do see sharp increases in discretionary consumption, and which is why for many years consumption has been considered one of the plays from the Indian investment landscape. A combination of these various factors that I discuss does lay a very attractive foundation for the sector to really come back in terms of performance. And what we have been kind of struggling with a certain amount this year is trying to identify what are the specific sectors, right, that is going to drive the next kind of market move. And I think consumer could be one of them.
Okay, all right. Some of the OMCs also on your list, Ashi, see value in them. Stable crude prices, likely some amount of value left on the table where those stocks are concerned, along with the PSU banking stocks.
So I think oil and gas is a space that we tend to not focus so much on. Like I was mentioning our philosophy earlier, we like kind of predictability. We like having some kind of sense of being able to have a fairly accurate guess in terms of where a business is likely to be 3-5 years down the line. The moment you're looking at the oil and gas sector, just government interference, the volatility that you see in crude oil prices, it makes it very difficult to take a structural call on this theme. You also have the kind of underlying problem of this larger shift towards renewables over the longer term. So we tend to kind of stick more towards longer-term structural plays, I think, which is why oil and gas is, again, a sector we don't focus as much on. But I think PSU banks are quite interesting, especially the better run kind of PSU banks. SBI clearly comes to mind, but you have others as Bank of Baroda, etc. The key call out here is that you are going to kind of see a valuation kind of a re-rating. Now, you're already well through this. There was a big gap that existed between the private sector banks and PSU banks. That gap has narrowed quite considerably over the last couple of years. But as performance of PSU banks are coming back, you are seeing growth coming back, you are seeing asset quality being manageable. These should kind of steadily compound on their earnings, and there is still a certain amount of a gap reduction play that could be there. PSU banks is a space we think one can participate in. We tend to prefer your better run private sector banks more in terms of the fact that we like longer term compounders of capital. But I think high quality PSU banks are also quite interesting, and they are available at quite attractive discounts.
The take coming in, we were talking about the oil and gas space. Today, BPCL and Oil India, they are two stocks that are in focus. They've signed a non-binding accord for a new $11.3 billion refinery, so that looks good. But the stock that was just flashing on the bottom of your screen is L&T Finance. Back-to-back two deals happening on the stock. First with 55.9 lakh shares, that's 5.59 million shares coming in, and 6.43 million shares in another block. So lots of block deals happening around today. And L&T Finance is one such stock. Kunal, your take on L&T Finance, sharp spike in the stock right now.
Yeah, sharp spike, and I think because of the block deals now, the volumes for L&T Finance is almost a 2-month high on the daily basis on the NSE. The last time I think we'd seen such kind of a volumes in a spike for L&T Finance was in the month of July. But unfortunately from there, the stock actually went to a 8 to 10% correction. I think from 215 to 20 odd levels, the stock came down to sub 200 kind of a mark in that time frame. So we may probably expect a very similar kind of a stance from L&T Finance over the near term, but I think it's been a fantastic chart on a YTD basis. Also, I think the stock has done exceptionally well, moving up from 130-40 levels to now 260-270 thereabouts. So long term wise, very attractive, but maybe because of the block deal and the high volumes, you might probably expect that the stock may just about go into a bit of a corrective mode over the near term.
Okay, so that's on L&T Finance. Ashi, the other big mover today is an Indus Towers. Again, the numbers were largely in line with expectations, but we've seen a stock do very, very well. Is that largely on the back of Vodafone? Is that what is keeping Indus Towers abuzz, in your opinion? And is this a good value play? Because you will have some bit of the Vodafone debt which will likely get paid off to Indus Towers rather, and therefore should be positive from a cash flow perspective where Indus Towers is concerned. How do you view this entire dynamic play out?
So Indus Towers is kind of interesting from a value play, and clearly you do have the same, right, in terms of the potential for the debt reduction. Let's see if that actually does play out as expected. It's a space we just broadly it is a kind of ultimately it is a utility. It is dependent on kind of growth of cellular infrastructure required in the country as mobile penetration keeps increasing, especially in terms of 4G, 5G and incremental services. You will need to keep having incremental tower additions. That said, again, this is a space which is interesting, but I think you need to look at it more from a value perspective, because ultimately in this business, kind of ROEs are not going to be exceedingly high. It is ultimately until in a utility business. And accordingly, from that perspective, I think the moment you do get a certain amount of value re-rating taking place, especially in the context of possibly some event like this Vodafone deal, it's probably not the best longer-term buy and hold. Pretty interesting from possibly a shorter-term perspective.
Interesting from a short-term perspective, not so much from a long-term perspective. Ashi, some of the tire stocks, and we spoke with the management of JK Tyre just an hour ago. What's the sense like on that? Because again, there's huge positive traction there, given rubber prices have come off, margins are going up, and profitability is surging, because just a few bips increase in margin is causing that kind of impact on profitability, if I can call it. Do they also come on your radar as a result of all that's played out, or do you believe that the rally in the stock has already pretty much penciled in a lot of what's happening on the results?
So what happens with any industry like tires, right, or any kind of industry where there is substantial raw material fluctuation that can lead to big swings in margins, you always want to be buying these companies on a contra basis. At a time when raw material prices have moved up substantially, the stocks have gotten beaten down because of kind of profits having plummeted. These are great times to buy these companies, and as kind of raw material prices start to come back down, you can see big upswings. If you get this contra call right, very often you can make very attractive returns over the kind of short term. And our view on most such kind of cyclical plays is that if there is clarity around the cycle, and especially if you buy into the cycle on a contra basis, right, and anyone who bought into tires 3, 6, 9 months ago would have actually benefited from that. These companies need to be looked at from that perspective, right? Now, after a larger move, you could be probably going to judge how much of the move you think is still pending. There is still going to be the next few quarters are still going to be quite attractive in terms of earnings growth as RM prices continue to come down. But like I mentioned, these are larger contra plays. You've already bounced off the lows. There probably is a certain amount of steam left, but you probably don't want to overstate it.
Okay. Kunal, I don't think we've taken a view on tires from you. JK, Apollo, structural moves that we've seen in some of these stocks. And the story also seems to be changing fairly quickly on the fundamental side of things. Talk to us about technicals.
Yeah, this is an exceptional move, and I've not seen the tire stocks moving up the way they've, I think, in the last 3-4 months, frankly. And this is a very synchronized kind of a move for many of the tire stocks on the upside. And I strongly believe that we are looking at a new wave of price uptrend from the auto anchor names, and especially the tire stocks. I frankly wouldn't be surprised, potentially that these stocks over the next few quarters may actually try and challenge their lifetime highs, on a consistent basis, looking at the near-term trend, looking at the volumes, the pattern, the breakouts, because these stocks from 2024 highs, for example, JK Tire had made a higher closer to 540, 550 mark, had gone down to almost like a 50% correction. And from there, the stock is going into sense of a major recovery, has come back to 420, 425 where it's trading right now. I strongly see that this could be a potential stock which has potential up move of another 30% over the next 12 to 18 months. So very bullish on the entire tire pack.
Okay, and